Ladies and gentlemen, good day and welcome to the EIL Engineers India Limited Q2 FY26 earnings conference call hosted by DAM Capital Advisors Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Bhumika Nair. Thank you, and over to you, ma'am.
Yeah, hi. Good evening, everyone. On behalf of DAM Capital, I welcome you to the Q2 FY26 earnings call of Engineers India Limited. We have the call today being represented by Mr. Sanjay Jindal, Director Finance, Mr. Suvendu Padi, Company Secretary and Investor Relations, Mr. R.P. Batra, Executive Director Finance and Accounts and IR, Mr. Amanpreet Singh Chopra, Senior General Manager, CMD Office and IR, Mr. Vivek Meeda, Senior General Manager, Marketing, BD and IR, and Ms. Neha Naruda, Senior Manager, Company Secretariat and IR. At this point, I'll hand over the floor to Mr. Jindal for his initial remarks, post which we'll open up the floor for Q&A. Thank you, and over to you, sir.
Thank you, Ms. Bhumika. Good evening, everybody, and a warm welcome to all the investors who are attending the investors call. We have declared our financial results for the second quarter ended 30th September 2025 today. Our order book status is has reached its all-time high and stands at rupees 13,131 crore as on 30th September 2025, as compared to rupees 12,145 crore as on 30th June 2025. Order inflow in EIL up to second quarter of financial year 25-26 stands at rupees 3,765 crore. We have declared results of quarter and half year ended September 2025 on 14th November 2025. As regards to financial performance for 3 months ended September 25, the company has registered turnover of rupees 900 crore, which is rupees 676 crore in the second quarter of the financial year 24-25. Turnover from consultancy and engineering segment stood at 411 crore and from turnkey segment at rupees 489 crore. During the current quarter ended September 25, the company has recorded profit before tax of rupees 150 crore and PAT of rupees 115 crore in comparison to rupees 100 crore and 79 crore respectively during the second quarter of financial year 24-25, showing an increase of 50% in the profit before tax and around 45% in the PAT. Notably, EPS for the quarter ended September 25 stood at rupees 2.04, which is September 24 at rupees 1.41. Operating margin during the second quarter of financial year 25-26 stood at around rupees 102 crore, that is 11.3%, which is rupees 47 crore, that is 7% during the second quarter of 24-25. EBITDA, including other income of the company during second quarter 25, stood at around rupees 160 crore. EBITDA margin is 17% in comparison to 110 crore EBITDA margin 15% during the second quarter 24. In the first half year of 25-26, the company achieved a turnover of rupees 1,757 crore in comparison to rupees 1,287 crore in the first half year of 24-25, showing an increase of around 37%, with turnover from consultancy and engineering segment amounting to rupees 819 crore and rupees 938 crore in turnkey segment. For the half year ended 30th September 2025, the company recorded profit before tax of rupees 243 crore and profit after tax of rupees 185 crore in comparison to rupees 174 crore and 134 crore respectively for the half year ended 30th September 2024, showing an increase of 40% in PBT and around 38% in PAT. Operating margins first half year of financial year 25-26 stood at around 9.3%. EBITDA, including other income of the company for the first half year ended 30th September 2025, stood at around 265 crore. EBITDA margin is 14% in comparison to rupees 194 crore for the first half year ended 30th September 2024. The company is maintaining a healthy EPS of rupees 3.29 for the first half year ended 30th September 2025. On the consolidated front, the company earned a profit of rupees 83 crore for the quarter ended 30th September 2025. For the half year ended September 25, the profit stood at 149 crore. Thank you. Now it's over to Ms. Bhumika. To you.
So we'll start with the Q&A.
Yeah.
Okay, sir. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Amit Anwani from PL Capital. Please proceed.
Hi, sir. Thanks for taking my question and congratulations for the very strong execution which they have done. So now my first question again on execution. We have already done kind of 33% growth for first half to first half, and I recollect you guiding about 20% plus for full year growth. So now are we changing then that stance since the execution has been quite strong in H1? So just first thing wanted to understand on the guidance, and second on the order prospects for next 6 months. We understand that you have one international consulting order again in Africa, which you announced about 600 plus odd crore, and H1 intake is roughly about 3,700 odd crore. So what is the full year target now, and what are the prospective orders? And on the execution, are we changing our guidance?
For the guidance purpose, in the turnover, we are giving guidance of 25 plus percent, 25% plus, and we will stand by our margins. Business segment profit of around 25% in the consultancy business, and in the LSTK, we will maintain 6 to 7% segment profit. And for the rest of the portion, Mr. Vivek Mehra will answer.
Hi, Amit. This is Vivek.
Hi, Vivek.
Just to update you on the business prospects of it. As of today, we have already crossed 4,000 crores. Okay. And we are moving towards our last year's target, 8,000 crores. They are going to definitely cross that 8,000 crore mark and hope to get more than that. Internationally, when you were talking about this project this year, we have been able to secure around 1,600 crores from overseas. So this year in the consultancy segment, overseas has contributed more, and we are targeting few major projects more in this. In months to come, you will hear more information on that. At the same time, we are working in the domestic market, so prospects are good. We will definitely cross the last year's mark, and it will go beyond that definitely.
So that's great to hear. So one thing is that you highlighted 1,600 out of 4,000, that is 40%. So are we eyeing for 40% plus consultancy contribution in the 8,000 plus order inflow, which you're going to have this year?
It would definitely be as part of consultancy. Normally, it remains around 40 to 50% within the consultancy segments. Overall, it would be somewhere around 20 to 25%.
Right.
In the overall.
Yeah. Understood. Second question. Yeah. Second question on, I was just observing the revenue from consultancy overseas. which was kind of 85 to 100 crore last year, quarterly run rate. And now this year it is about 70 to 75 crore quarterly run rate, despite the overseas consultancy order book has been massive. We won massive orders last year also. So any particular reason of this not picking up? In fact, it has declined the overseas consultancy revenue this year.
Actually, till now, our major client was Dangote Refinery in Nigeria, and we were getting turnover from our Mongolia business also. Now these projects are going to be tapered because the work has been completed. But since we have got good order in the 24-25 itself in the foreign territory, so that business has started execution taking on. So we are confident that in the next quarter you will see the results of massive order book in the foreign territory.
Understood, sir. And are we targeting the similar 50-50 mix, or since the turnkey was very strong this quarter, so what is the mix we are expecting for this year now?
On annual basis, it will be 50-50 or 50 to 48% at most.
Understood. Lastly, sir, on the losses from associates, I am assuming that this is because of the shutdown in Ramagundam. So just an update on that, because I think H1 basis, the losses has been massive, and on the PAT level, the numbers are lower because of that, despite very strong performance. Just wanted to understand an update on Ramagundam. Thank you.
In this quarter, Ramagundam project was under shutdown for 45 days out of 90 days. So in this quarter also, we have loss of around 25 crores. But in the third quarter, the project plant is going well, and we are expecting profit in the third quarter. And we are definitely expecting the third quarter will give profits. There were some technical problems, so the plant was under shutdown for 45 days in the second quarter.
Understood, sir. Thank you so much for answering the questions. All the best.
Thank you.
Thank you. We take the next question from the line of Mohit Kumar from ICICI Securities. Please proceed.
Yeah. Good evening, sir, and thanks for the opportunity, and congratulations on a very good quarter. So first question is on the EBIT margin for the consultancy. I think this quarter it was 28%. Is there any one-off which we should be aware of?
Sir, I could not understood actually.
So the
Your
EBIT margin on the consultancy is 28% during the quarter. Yeah, is there any one-off?
About the right back.
No.
Actually,
the margin on the consultancy, EBIT margin.
Sir, actually in this quarter we have profit segment of 28%, but if on the half yearly basis it is around 25%, and we are sure that we will be able to secure our margin of around 25% on overall basis in the consultancy segment, and in the LSTK segment we are maintaining the segment profit of 6 to 7%.
Understood, sir. And is there any outlook on the domestic consultancy order inflow or pipeline? There was also an IOCL Paradip Phase 2 project. Is the tender out?
Mr. Vivek Vida will answer.
With respect to the IOCL Paradip, Phase 2 tender is going to come out. We are in the Phase 1 of execution. As soon as the Phase 1 is completed, they will have their management approval, and they will proceed with the Phase 2. So both the phases has been awarded to us. It's that we'll get the work order for the Phase 2 subsequently when the Phase 1 is completed. So Phase 1 is progressing at this point of time.
Sir, is it right to say that Phase... Understood, sir. Is it right to say that the Phase 1 was merely 100 crore worth of project, and Phase 2 will be much, much larger? If I'm not wrong, it should be around 900 crore. And will it be booked in this fiscal?
Sorry?
Will it be booked in this fiscal year, the balance Phase 2, or next year, next fiscal?
It should come towards the end of this fiscal year. Towards the end, it should come. Because the phase 1 is in progress, and we are going to submit the reports, the study reports, and then they will take the board approval and then go decide on the proceeding on the job. So we are hopeful that by the end of this financial year, it should be done. Phase 1 should be done, and they should get the clearance. Or otherwise, it would be early next financial year. It should be awarded.
And so any other large domestic domestic order in pipeline which we are looking at in H2 or F27?
You have this Andhra refinery which is going on. We are working on this feasibility study. Hopefully, the second phase, if this study is accepted, then they will come with the implementation phase. Similarly, there's a petrochemical complex, ADCPL. They are thinking of expansion. Tender could come. There could be some small specialty chemical projects. There are various studies have been done by IOCL, and they are thinking of implementing the various specialty chemical projects. So those are expected to come in this financial year.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you.
Thank you. We take the next question from the line of Prateek from IntelSense. Please proceed.
Yes, sir. My question was on the write-back that we have done. I think about 35 crores of write-back. Can you, sir, give a light on as to which project this was and when was the provision actually made in the past for this 35 crore amount?
Actually, this provision relates to one of our projects at Dangote Refinery in Nigeria. That provision is kept for our defect liability period. Whenever this defect liability period is over, client releases our bank guarantee and then provision is reversed. So client is reversing our bank guarantee in the piecemeal basis. So in this quarter, we have got the provision reverse of 35 crore based on the reduced liability on this project.
And sir, like you said, it's on a piecemeal basis. So is any other amount that is we are expected to receive on this?
A small portion is balanced. That will be released in the due course of time, maybe in this quarter or next quarter.
Okay. Just sir, one last question. Sir, in our last Concall, we had mentioned that there were several projects which were, in advanced negotiation stage. So, in this, this quarter orders, have those materialized or still, we are expecting those kind of orders?
You can see our order book of 13,000 crore. Definitely, some of the orders have been matured. And in this quarter, we have already got the order of 3,700 crore. So definitely our efforts are fruitful and we have got some of the orders.
Okay. Thank you, sir.
Thank you. We take the next question from the line of Saket Kapoor from Kapoor & Co. Please proceed.
Yeah. Namaskar team and धन्यवाद sir opportunity के लिए sir. Sir, firstly, sir, we were also looking for some diversification in terms of moving away from the oil refinery space and then looking for the hydrogen opportunity going ahead. So, sir, where are we? There's some work was also done earlier, which were informed in some forum by the MD. Correct me there, sir, if I'm with the information.
With respect to the diversification, definitely we have done diversification in this segment. We have moved out of basically the hydrocarbon. Today, our infrastructure business is almost more than the hydrocarbon business. That's a major diversification. With respect to the new areas which we have talked about, like hydrogen ho gaya, or coal gasification ho gaya, or biorefinery ho gaya. So biorefinery, you know that we have already done one biorefinery, bamboo-based biorefinery. Right. This year we have been recently we have been awarded one assignment for coal gasification from the coal to SNG by NTPC. वो हमें अभी मिली है assignment which we are executing. We are anticipating this kind of assignments from other clients also. We are in the bidding process for various projects of this sort.
Right. Sir, when we look at our capital investment in the various JV, is Ramagundam Fertilizer is there, and then, sir, we have a small stake in the Numaligarh refinery also. So what has been the contribution, in any, if any, in terms of any dividend and how is the performance there? I think so our major investment is for this 4% stake to the tune of 830 crores.
NRL contribution.
Yeah, it will be coming in the next quarter. Another dividend will be coming in the next quarter. So they are basically in the expansion phase. So they are giving the limited dividend. In the last financial year, they have given the substantial dividend, but going forward, they are investing the money for their new project. So whatever dividend they have declared for the last financial year, that will be coming in the next quarter.
Okay. So what was the amount, sir, last year? How much we have received?
In this year, around 20 crore will be coming.
Okay. And sir, any steps, we will hold on to this minority stake of 4% in the total realm of things. We are only holding 4% of the entity. So, or we can also look forward for the divesting this stake.
Actually, at this moment, we have a percentage of 4.37%, and whenever opportunity comes, we will review it.
Okay. And also, sir, we have two upstream assets investment also under NELP 9. So already you have mentioned that during the bidding stage, there was the project cost was envisaged at 300 crore as mentioned in your presentation. So we have not invested anything on these assets as of now.
We are not investing any further. Basically, whatever investment was done is done. So we are not anticipating any further investment in this block.
And lastly, sir, with the reversal of this 35 crores because of the Nigerian no defect project which you mentioned to the earlier participant, that means net of that has moved up the profit by that amount. So we need to factor in that number in terms of the profitability. That is
actually reversal of provision is a continuous process.
Okay.
Because provisions are reversed whenever defect liability period of the projects is over. So it's a routine business for EL. Some of the provisions are created and some of the provisions are reversed. So this is not a cause of worry for EL.
So what is the net of impact? How much provision we have made, if any, for this quarter or for the first half, and how much have been reversed in totality?
For this quarter, it is reversed on overall basis. I think it is -12.
Yeah.
But in the last quarter, it was on positive side. So sometimes it is on positive side, sometimes it is on negative side.
As per contractual provision, we create the provision, and as per the contractual provision, we write back the provision. So this is a continuous process. Over the tenure of the project, the provisions are created when the project is completed, and in case any liability does not come, we reverse that. So it's basically a continuous process.
In the coming time, some more projects are going to be closed or defect liability period is going to be over. So it's a continuous process.
Right. And then lastly, on the cash on the books, and what steps are we taking? How can we create value through that cash, through sharing with investors, or what is the best possible way? What is the closing balance, the cash balance we have, and how are you looking forward to deploy that thing?
Currently, all the cash is being deployed as per DP guidelines, and we are constantly looking for the investment opportunity where the capex are lower and standalone facility. Whenever we get a good opportunity, definitely EL management will consider for the investment of the same, like NRL and RFCL. And we are constantly looking for.
Closing balance, sir, can you confirm? Cash on book?
900 to 1,000.
It is between 900 crore to 1,000 crore.
Right. Thank you, sir. All the best.
Okay, thank you.
Thank you. Before we proceed with the next question, a reminder to the participants, in order to ask a question, you may press star and one on your touchtone telephone. I repeat, ladies and gentlemen, in order to ask a question, you may press star and one on your touchtone telephone. We take the next question from the line of S. Ramesh, an individual. Please proceed.
Good evening, and thank you very much, and congratulations on your results. So if you look at the split between the turnkey and the consulting income, so if your turnkey revenue share is higher, it is a drag on your margins, right? You are talking about single-digit margins. So as a strategy, how do you view the split between the two revenue streams from consulting and turnkey? How do you see your overall strategic, objective of maintaining ROC for the business based on this blend?
Actually, it is definitely we have more segment profit in consultancy segment and less in LSTK business segment. But in the Indian economy, there is limitations on the consultancy business because at one time mega projects are not more than 2 or 3. So whenever we are having opportunity in India in the consultancy business, definitely we are grabbing it, and we are expanding our footprints in international market also for the consultancy business. And with the balance man-hours, we are doing the LSTK job so that we can have a good turnover as well as good bottom line also.
So if you look at
as a strategy, we are trying to maintain consultancy business around minimum 50%.
So basically, you are saying that overall you will be able to sustain your ROC based on the top line growth and the cash flows. Is that right way to understand?
Basically, LSTK gives the top line, but consultancy gives the bottom line. So we are striking a balance between the two.
Okay. So in terms of the accounting in turnkey projects, when you book the income, is there any Ind AS impact and what is the percentage booking you do in terms of the overall timeline for the turnkey revenue?
Actually, in the turnkey business, turnover is coming on cost progress basis. It is not based upon the timing or billing. Once we get the project, the whole turnover is booked within 3 to 4 years because a mega project takes minimum 3 to 4 years. And that is the timeline for the mega consultancy as well as LSTK projects.
Okay. So, fine. So in terms of your investment holding, you are getting about 12% return. If you look at the other income, the value of the investment in the standalone numbers. So, is there any strategic rationale for holding on to these investments, in Ramagundam Fertilizers, for example, or the other companies, given that the returns are not really what you would expect from equity investments? What is the management thought process on the equity investments? Do you expect the returns to go up in future, or is there a thought process in terms of exiting some of the investments which may not be corrected?
Actually, I think Ramagundam is a very good investment because India is feeling short of urea, and Ramagundam is able to generate minimum profits of 500 crore on annual basis. But we are facing some technical problems. That's why project is going for the shutdown on time-to-time basis. But we have sorted out the issue. And in the next quarter itself, in this quarter itself, the plant will generate the profit. So this is not a question of worry for EIL because our investment is safe in the Ramagundam project.
Okay, thank you very much, Vishwam. Yeah. Sorry, please go ahead.
Yeah. Hey, thank you.
Thanks a lot, and I wish you all the best.
Thank you. We take the next question from the line of Mohit Kumar from ICICI Securities. Please proceed.
Yeah, hi. Thanks for the opportunity once again. So the question, this Ramagundam, I think, was making profit for last couple of years, right? So what has happened in last 2 quarters? The losses have been, the first quarter was 8 crore, I think. Second quarter is only widened, right? So is it fair to expect that from Q3 onwards, you could start showing normal profit, or do you think this will continue for some more time?
Actually, we are facing some problem in stabilization, and yeah, definitely you are right. In the first quarter, there was shutdown, and in the second quarter, there was shutdown also for the 45 days. But now we have sorted out the problem, and now plant is running well, and definitely we are going to get profit in this quarter.
Understood. And the second question is on the order intake guidance for the full year. I think we have guided for broadly 8,000 crore kind of order intake. Is it fair to assume that PNC will be close to 5,000 crore order inflow for the entire fiscal, or will it be lower number?
You are talking about the order inflow?
Only order inflow for the entire fiscal year 26. Out of 8,000 crore, how much could be the consultancy order inflow?
Out of 8,000 crore, it would be definitely consultancy would be somewhere around 50%. It's typically we maintain the balance of 50-50. Sometimes it is for 55%, 46%. It depends, but remains in this range itself.
So last year consultancy was very good. I think we did 44,500 crore. So I was asking whether we can cross that number, or do you think it will be lower than that number?
We can. Depends. We definitely can.
Understood. And on the international side, I think the size of orders are, getting slightly bigger. What is the size of orders, the large orders in the pipeline, say in the inquiry pipeline or in the tendering stage? Is the pipeline growing, or is the pipeline is only small orders will come in bits and pieces?
So it is a mix of pipeline. We are working in Abu Dhabi. We are working as an engineering consultant with that number of companies. We have running some agreements with them. We get various smaller assignment jobs under that. We also get the bigger assignment jobs, bigger size jobs under that. Means 300 crore, 400 crore. So it depends. But we cater to all kind of jobs. We want to grab maximum so that our order is maintained. So we maintain the mix of that. Because the smaller assignments have a smaller period, but it gives you good revenue. The bigger assignments have more execution. It's a longer execution period. So that's one of the opportunity. But it is a mix of both.
Understood. Thank you and all the best. Thank you.
Thank you. We take the next question from the line of Anupam Goswami from Third Life. Please proceed.
Sir, on the consultancy order that we won, the large order, what is our timeline of execution for that? And on the whole overall order book, how do you take it on the margins front and the execution timeline for the whole order book as well?
Typically, any bigger project will have a time schedule of 36 to 48 months. So specifically, this project which we have won, it is around 36 months. So the turnover would be divided into basically the recovery would be in 3 years' time.
In the first year, any new project gives only 10 to 15% turnover, and in the second and third year, it gives 25 to 30% turnover. And in the fourth year, it gives 15 to 20% turnover. This is the general trend.
Okay, I'll join back in this. Thanks.
Thank you. We take the next question from the line of Rajesh Agarwal, an individual investor. Please proceed.
Sir, how much we have invested in Ramagundam project, and what can be the annualized normal profits? if everything is okay?
We have invested around 491 crore in Ramakundam project.
Okay.
And when everything is okay, it will generate minimum 500 crore profit, and our share will be 26%.
26%. Okay. And now things are normalized, sir, there?
Things are normalized. Plant is running well.
Okay. Sir, one question I want to understand on the write back. Suppose this quarter we have written back 35 crores. So net may, how do we understand how much we have written back? Some provisions must have been made for the other orders also.
Actually, we have written back a figure of 35 crores.
Okay.
Actually, as per contract, provisions are being made, and whenever our defect liability period is over, we reverse the provision for that particular project. So in this quarter, we have reversed the one of the major project amount, 35 crore, and we have made some provisions also, but overall impact is negative.
Negative of how much? 12 crores.
12 crores.
Okay, 12 crore less we have provided.
12 crore we have reversed because
okay, 12 crore
is made less. Provision is reversed more.
Okay.
And sometimes it is created, it is positive. Sometimes it is negative. It depends on.
Understood. So without reversal, what is the EBITDA in the consultancy business? Margin?
So part of EBITDA.
Part of operating profit.
Okay. The consultancy EBITDA will be how much separately? 25%?
Basically, it's a segment that we are publishing.
Okay.
The segment profit is 28% in this quarter.
Oh, understood. Thank you. Understood. Thank you. And how is the order outlook, sir? Future order outlook?
Order outlook is good. We'll be touching more than 8,000. We are working towards it. We'll meet the last year's target, and order book has already exceeded with respect to the last month, so it's further going to increase. Let's hope for the best.
What can be the annualized run rate in the turnover, including both turnkey and consultancy? 6,000 crore?
8,000 annualized turnover.
You know, our annualized turnover for the last year is 3,000 crore, and we are expecting more than 25% growth in this year. So it may be around 3,800, 39 crore, 3,900.
Okay. Thank you, sir. Thank you.
Thank you. The next question is from the line of Samar Khandelwal from ICICI Securities. Please proceed.
Thank you for this opportunity. Sir, could you share some color on how our order inflow trajectory is from domestic markets and international markets?
Domestic, we have told you that this year, as of now, we have booked the order worth of 4,000 crores, out of which approximately around 15 or 1,800 crores is from the LSTK segment. Rest is from the consultancy, and consultancy we have overseas has contributed more than 1,680 crores.
Understood. And going forward, how do you see it to be?
We'll be going towards the last year's figure of 8,000 crore. We should cross that. We're already on 4,000 as of now.
Sir, I meant, do we see more opportunities in the international versus the domestic, or how is it? Is it balanced from both the?
International has a lot of opportunities. We are focusing on the international market aggressively. At the same time, domestic market also has opportunities. We are working on them. It is like that. Sometimes these activities, some of the contracts, major contracts we were negotiating has been concluded. Some more we are discussing. It could get realized by the end of this financial year.
Okay. Thank you. That's very helpful. Thank you for the question.
Thank you.
Thank you. We take the next question from the line of Saket Kapoor from Kapoor & Co. Please proceed.
Yes, sir. Only a small clarification. Since we are having this equity investment in Ramagundam only, or Ramagundam Fertilizer, So these are only sir book entries that we have to pass through with respect to the equity holding we have. So even if the company reports the estimated profits which you have been explaining, we will be again booking only book profits. It is only when they declare dividend. Yeah, please correct me, sir.
On the consolidated front, we are consolidating only bottom line figure. Turnover is not being included in the EIL turnover, and RFCL has not started the dividend yet. Whenever dividend will be declared, that will be taken into other income.
Right, sir. No, so my question was कि whatever losses or profit which we are booking because of our equity investment are only the book entries. There is no actual cash impact on.
That is a part of our consolidated results. Whenever they will declare the dividend, that will come into the company and will be shown as other income in the standalone financial.
As of now, one can understand that whatever 491 crores we have invested, that is the equity as we hold in our stock market. There is no return as of now till they start releasing out any cash. That is what the understanding is.
Whatever loss in RFCL, that is being offset with our profit on the consolidated basis. Equity is intact.
Okay, so that, sir, we are not getting any advantage from the losses. Are the tax liability on our consolidated numbers get reduced because of those, or they are only the book end?
Nothing. Whenever
nothing. So that is what my question is. Yeah. Other than that, this is only a book entry. It has no other reference.
Yeah, book entry for the consolidated financials. In the standalone, there is no entry because it's a temporary loss. In case it will permanent loss, then entry I will provide it.
Right. And sir, we have also participated in the rights issue for NRL also in the first quarter. So we have retained our stake only, or is our stake diluted? To what extent?
We are maintaining our percentage, and based upon that, whatever right issues there, we have subscribed that.
Okay. Thank you, sir, and all the best to the team, sir.
Thank you. Thank you.
Thank you. We take the next question from the line of Anupam Goswami from Third Life. Please proceed.
Thank you, sir, for giving the opportunity again. So if you can give us a little color on the whole oil and gas capex in the near term, or how is it in the domestic as well as in international, and where are we targeting in our outlook?
If you see that EPCL is investing in the refinery petrochemical complex, investment is around 95,000 crores. Similarly, the Barmer refinery, which was there, it was around 75,000. It is around 72,000 crores. ISL in all has invested around 1.66 crores in various projects, various refinery projects. MENA is investing 50,000 crores. Similarly, you have this ONGC, Gujarat, Jamnagar. They're also investing. They're thinking of petchem project there. It is around 80,000 crores to 1 lakh crores. Smaller various independent refineries could be there somewhere around 1.25 crores, and also there are a lot of opportunities are there. Many studies have been done in past, and those are still under consideration with the clients. So if they get materialized, let's hope for the best. It should be implemented. Also, there has been some issues with respect to the tariff issue which is going on. So some of the private ventures to set up the petchem plants based on the imported ethane, they have got stalled. Until the time this tariff issue is resolved, it will take some time to settle. So when this tariff issue is resolved, hopefully it should get resolved, and then we should see those investments getting realized in times to come.
Got it, sir. Thank you so much.
Thank you. We take the next question from the line of Mohit Kumar from ICICI Securities. Please proceed.
Yes, sir. Thanks for the opportunity once again. My first question is on the, do you think there will be a dilution on the consultancy margin due to rising international mix? or is it fair to expect that we'll maintain that band of 20 to 25% margin in the consultancy?
On overall basis, in the domestic as well as international projects, we are maintaining our margin of 20 to 25%, and we are expected to maintain it.
Understood, sir. And sir, will there be any impact of pay commission on next year consultancy margins?
That provision we are already taken in the accounts. So as on a date, there will not be any impact on the financials of the company, but definitely whenever it will be higher, then that will be looked into.
Understood. Last question, Andhra BPCL project. Has the location been zeroed in, and can we expect the next stage of tendering in the next fiscal?
It should be towards the end of this financial year or the early next year. The study is on. We are doing it. So that at this point of time, they are deciding the configuration and some environmental impact assessment studies are being on. So by the end of that study, they will take a decision and take the management approval. Their business decision they will take to implement that project. So it should happen towards the end of this financial year or early next financial year.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you. We take the next question from the line of Pratik Dugar from IntelSense. Please proceed.
Thank you for providing the opportunity again, sir. Sir, you mentioned about the oil and gas capex, and among these, sir, large figures that we hear, what would be the opportunity side that would be, for EIL actually?
So everything, all the figures which we see are the opportunity for us. But it's a competitive work. We will be bidding for them and we get some. But these are the staggered opportunities. They are not coming in one way because it's a large investment. Many of the projects will come in the phases. So we are anticipating that we should be getting good business out of it.
Okay. So, sir, my understanding was that, for these projects, whatever is like the construction, we are handling mostly the consultancy part, or when we take up the turnkey, how are we bidding for that, sir?
No, any of the project, the figures which we have told is the total capex part, which includes the cost of the land and various other costs, including the cost of the plant. Consultancy is very smaller part of it. So we primarily focus on the consultancy services. We don't get into the construction. We are the consultant. We get into the concept to commissioning of that project, starting from the studies to implementation of the same. We get the work done through the contractors. So we work as basically owners, engineers, or a project management consultant, whichever way you say. We are the basically extended arm of the client in implementing that project. But construction is done by somebody else. It's the specialized consultant or the EPC contractors. We are not into the business of construction.
Got it, sir. So just like as a thumb rule, what would be the percentage of consultancy for a given, say, project cost? Can we get a guidance on like what would be the thumb rule for, say, some percentage figure of the total cost of the project?
So it all depends in which mode it is being executed because it could be, if you're you see the larger project, it could be 2-3%. Our service would be 1 or 2%, 3%, depending on the size of the project. These are the just overall costs which are available in the market. It's if you talk about 1 lakh crore of the project, it's not actually the complete the cost on which we will be getting the consultancy. We will be getting the consultancy services on the plant and machinery cost of it. So if you see the overall project cost will be 1 or 2% or 3%, depends.
Sure. Thank you, sir.
Thank you. As there are no further questions from the participants, I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Thank you.
Thank you.
Thank you. On behalf of DAM Capital Advisors Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you very much.
Thank you.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.